Okay, I think we'll go ahead and get started. TJ has quite a bit to talk about today, so I want to give her as much time as possible to go through all of her slides. First of all, I'm Zach. I'm on the education team at the Iowa Center. I want to thank everybody for showing up. This is our inaugural run of webinar virtual style topical Tuesdays, so I'm sure it's going to go perfectly smoothly with no hitches, and everyone will love it. The first thing I want to say is, for the very uncertain time that we're all dealing with at the moment, we first and foremost want to be a resource for everyone, for the community to both be heard and helped. So I want to point everyone to our website. Excuse me. On our homepage, we have a link to a COVID-19 resource page. It's pretty expansive. So please go through that as time permits for all of you. If you go through that whole page and you find that there's some information that you need that is not on there, by all means, please get a hold of us so that we can add to it. We're constantly adding to it, and again, we want to be a resource center for everybody and all of their needs. We also have an Instagram handle at the Iowa Center that is posting information about additional resources, as well as upcoming webinars that we're doing very much in this style as a way to reach out to the community and provide information and provide an ear for people to ask questions and let us know what they're thinking. One more resource we have is a Facebook page. It is Iowa Small Business and Resources and Support. And again, very much in the same vein, it's a place for everyone to come together and talk as a community to see what everyone needs and how everyone can help everyone else, so that we can be a collective voice of and for the community. With that, I'm just going to wrap it up very quickly by saying, in such an uncertain time, certainly one of the most beneficial things we can do is tighten up our fundamentals and go back over the basics of owning a small business. And today we're going to have TJ talking about Financial Statements 101 as a starting point for that. So with that, TJ, if you would introduce yourself.
Hey everybody, this is TJ Daniels. I am the lending coordinator at the Iowa Center. I've been there for over 3 years now. I know I've worked with a lot of you on different projects. I actually work with IEDA's TSB loan program, and then of course the Iowa Center's own loan fund. I also do credit counseling and assist with other things, basically helping our clients build and grow their businesses. Russ Dale will also be back on the call. He's my partner in crime in the loan department. He does a lot of different jobs with the loan team, and he is also our IT person. But of course, right now our IT person is having audio problems, so he'll cut back in during this webinar and assist us with some different topics. So I am going to just get right into what we're going to talk about today. We are going to basically review a few different financial statements. We'll go over a personal financial statement. We'll go over a profit and loss statement. We'll talk about a balance sheet. We'll also go over a cash flow statement, and then we'll review each item quickly. I will talk about a couple of different accounting softwares, and then we will talk about next steps and questions. This will be a high-level review of financial statements. We'll stop every few slides for some questions, but the more in-depth questions we'll try to just schedule one-on-ones with everybody, or refer you on to different resource partners. So financial statements are basically formal records of your financial activities, and it allows you to figure out your position financially. Normally, we say that financial statements are important because basically it lets you see where you are financially, and it allows you to see what you need to do to achieve different financial goals. It will also allow you to see where you're getting the best return on investment financially, and it'll help you focus in different areas. So for a personal financial statement, I feel like they're important basically for tracking goals. Whenever I speak to a person and try to assist them with budgeting or credit counseling, my first question is, what is your goal? What are you trying to do? Are you trying to clear up your credit to buy a house? Are you trying to apply for a small business loan? So that is the first place I always start. The people who really need these personal financial statements are basically yourself, um, finance professionals such as myself, or your banker if you're trying to get a personal loan maybe through your bank. And then I also think that it's important to have this together for your tax professional. Normally, me personally, I try to work on my personal financial statement monthly and keep it up to date. The goal that I'm working on right now would be to purchase a home. So that's why I'm trying to stay on track and stay on budget. There's different apps that you could use. Right now, I use an app called, I think it's Every Dollar by Dave Ramsey. But there's Excel spreadsheets. We have some different resources that I believe will be, or they may already be posted online. They're Excel spreadsheets that are very, very helpful. So you don't have to really spend any money. This is something that you could easily do online. The personal financial statement basically is your personal balance sheet and your personal income statement. Your personal balance sheet is, it lists out your assets and liabilities. Just like a business and its balance sheet, you could see that your personal financial statement would have listed out your checking accounts, your savings accounts, your 401k, any properties that you may own, and then your liabilities, such as your credit card statements or credit card balances, student loan balances. And then when you go over to the personal income statement, this is basically like your showing your monthly ins and outs. So it'll have your paycheck. If you receive any other income, that will be up in the income portion. And then your monthly expenses, your mortgage payment, your utilities, food. A lot of the time, I try to make sure people also include entertainment, just anything that you spend money on. When I go through a person's personal income statement, normally I'll ask them to bring their bank statement because we want this to be as close to true as possible. Now we're going to move on to a business's profit and loss statement. We call this a P&L. This is also known as an income statement. Sorry. Trying to get Russ back on the call. Um, so profit and loss statement is a financial report that provides a summary of a company's revenues, expenses, profits, and losses over a given period of time. So normally when I ask for a P&L, normally I'll ask a person for either a year-to-date P&L, or I'll ask them for last year's profit and loss statement. So just depending on what the person needs it for, they may ask for a month, 2 months, or just a whole year's profit and loss statement. Normally when we look at a profit and loss statement, there's very specific things different. Normally there's items that we have to see on a profit and loss statement. So that's your revenue or sales, cost of goods sold, basically any selling, general, and administrative expenses, your marketing and advertising, technology, interest expense, taxes, and net income. We have an Iowa Center profit and loss statement that will be online. And here is what it looks like. Basically, you could see there's different categories. The reason why it'll say under revenue or sales category 1, 2, or 3, for every business, there would be different categories or labels. So if you ever call me and ask me to send you a sample profit and loss statement, all I do is I go online and Google like barbershop profit and loss statement sample. And then that's normally what I send a client. I would never know every category that would be needed for a profit and loss statement for different businesses. So normally I will Google it. And is the profit section, and then the bottom is expense. Sorry. So basically what we do, like I said before, is you calculate those together, subtract one from the other, and then we come up with the net operating income. Next is the balance sheet. Oh, this Russ? Okay, sorry. Nope, you sound better. So Russ makes a very good point. One of the documents that we require when you do a loan, and if it's for a business that is established, we will require a profit and loss statement. Like I said, I'm not psychic, so I don't know what all of your expenses are, but what I do end up doing is going through your business bank statement. So people know that I always ask for 3 months of your personal bank statement and 3 months of your business bank statements. And what I do is I go through all of your debits and credits on your bank, and then I try to account for it. Is it, for your business or whatever. And so that's why I always ask for people to try to keep their business expenses in their business accounts and their personal expenses in their personal account, because we do go through your bank statements line for line to make sure your statements are as accurate as possible. Not because we're trying to catch you doing anything or we think you're lying. It's just we're trying to make sure that we're doing our due diligence and giving you the money that you need for the things that you need. So maybe you're saying you only need $10,000, but after I look at your expenses, I could see that you really need $15,000. Or maybe this is a time where I could coach and say, hey, you probably really don't need 10, but you only need 5. And here's where I'm seeing the problem. So this is just us doing our due diligence and making sure we're being helpful to our small business owners. So that is the profit and loss statement. Was there any questions? Okay. Okay. So, okay. And I mean, I know we're spending a lot on this, but this is like all all of these statements are, they're kind of important. The profit and loss to me is a little bit more important. But if you guys look at the screen and you see the operating expenses, such as salary, payroll, rent, telephone, utilities, I've been getting a question of what fixed expenses are a lot lately. And a lot of those operating expenses are fixed expenses. Fixed expenses are expenses that you will have regardless of the income that you're bringing in or you're not bringing in. There are expenses that you'll have every single month, and normally they're just about the same fees. So your rent, your telephone, your utilities, any subscriptions you may have. So if you have a QuickBooks subscription or things like that, those are your fixed expenses. Um, okay, so now we're going to move on to the next one, which is the balance sheet. This is one of the 3 fundamental financial statements. The balance sheet displays the company's total assets and how these assets are financed through either debt or equity. And it could also be referred to as a statement of net worth or a statement of financial position. The balance sheet is based on this fundamental equation. Liabilities plus equity equals assets. The structure of the balance sheet. Normally it's 2 sections. One section basically outlining all of the company's assets, and then the other portion outlining all of the company's liabilities. So here is a sample balance sheet. This is also the Iowa Center balance sheet that we have. As you could see, here is the company, the assets, which would be the cash, accounts receivable, inventory, prepaid expenses, and short-term investments. There's the fixed assets and assets. And then at the bottom, we total all of those assets. Then we come to the liabilities, the accounts payable, the short-term loans, income taxes payable, accrued salaries and wages, unearned revenue. And then we total those. The long-term liabilities, we have the equity. So then we'll total all of the liabilities and equity. And then we'll have basically those two portions.
Yeah, that's awesome. I guess my couple add-ins are, like, the most important thing about the balance sheet is you honestly have to make sure that the liabilities and the equity equal the assets. If the balance sheet doesn't balance, like, just it's not right. So that's the number one thing, is just make sure the balance sheet balance, and the formula for that is liabilities plus equity equal assets. So that's the number one thing you should make sure that's going on with that, is that it actually balances and the formula actually is true. The next thing I would say about the balance sheet is that the balance sheet is for a single point in time. So, like, if you're doing a balance sheet for 2020, I would say it's probably as of December 31st, 2020, or whatever point in time in 2020 you want to actually mark it as. Whereas the cash flow statement or the income statement is going to be over a period of time. The balance sheet is at a specific time. So make sure that all those expense accounts and all those income accounts all are for the same exact period of time. You can't have you can't have your income taxes payable only up to July, but your revenue up to August. And make sure that all those line items are all at the exact same period of time to when you're doing the balance sheet. And then also you can see that it's obviously by most liquid to the least illiquid. So what's due first and what's due the longest period of time from now. And then revenue, for assets, it's what can you sell right away and what's going to be harder for you to sell, basically. That's it.
Okay, moving on to the cash flow statement. This shows, and this is another important one, it shows how much cash is generated and used during a given time period. It is one of the main statements that we use when we're trying to figure out what's really going on with the business. So the main three categories are operating activities, investing activities, and financing activities. And normally the statement is organized that way. The total cash provided from or used by each of these three activities is summed to arrive at the total change in cash for the time period. So the cash flow statement, this is a note that we wanted to make sure to let everybody know. The reason for the difference between cash and profit is because the income statement is prepared under the accrual basis of accounting, whereas where it matches the revenues and expenses for the accounting period. Whereas the cash flow statement only recognizes the cash that has actually been received or dispersed. So there's a difference between the cash basis and the accrual basis.
Yeah. Oh, sorry.
Nope.
Oh, yeah. I guess my point on that would be, like, with accrual basis, you're going to have accounts receivable and accounts payable. But with cash, since you're only accounting for cash in and cash out, make sure that you don't have an accounts receivable or accounts payable on your balance sheet. It's just cash in from your bank account and cash out from your bank account. So an accrual, you might have accounts receivable or accounts payable just because you're counting that income at the point of the sale or at the point that you sign that expense off, basically. For most cases with small businesses, yeah.
I think when we look at QuickBooks statements, this is one of the big errors that we normally see is people try to use both of these these different accounting types on the same statement, and you really can't do that. So here is a sample where you could see the cash receipts, cash paid out, and then cash position at the end of the month. So were there any questions or anything else you wanted to add before we review those 3 statements?
No, I mean, we can do the review. I just have something to say during the review.
Okay. So the first one, the first statement is that profit and loss statement. We call it the P&L. You could also call it the income statement. The key features of it is it shows the revenues and expenses of a business, and it's expressed over a period of time. So like I said, it could be either year to date, it could be a quarter, or it could be the whole previous past year. It just depends on what the person is looking for. It says it uses accounting principles such as matching and accruals to represent figures, and it's not presented on a cash basis, and it's used to assess profitability. So this is one of the statements that we look at to see where we could work on, what you're doing good at. The next one is the balance sheet. This is the one that's the company's assets and liabilities and the shareholders' equity. As we try to make sure you understand, it's liquidity, assets must equal the liabilities plus equity. The key features is it shows the financial position of a business. So it's a snapshot for a moment in time. And it has 3 sections, of course, the assets, liabilities, and equity. And then that formula that we keep on saying, assets equals liabilities plus shareholders' equity. The cash flow statement takes the net income and adjusts it for any non-cash expenses, then uses the changes in the balance sheet, the usage and receipt of cash found, cash flow display change in cash per period, as well as the beginning balance for ending of the cash balance. So in a roundabout way, what I'm trying to say in this review is that each one of these statements actually relates to the other statement. So the ending balance for the profit and loss goes into the balance sheet, and then it goes into the cash flow statement. So each one of these are just, they actually flows together. And I'm sorry, I should have put a picture up of how we look at that, but I forgot, sorry. So the key features of the cash flow statement is it shows the increases and decreases in cash. This is expressed over a time period. And it undoes all accounting principles to show the pure cash movements. So when we really need to see the incoming, outgoing cash, this is one of the things that we'll ask for. It has 3 sections: cash from operations, cash used in investing, and cash from financing. And it shows the net change in the cash balance from the start to the end of the period. So I tried to do a little summary that shows the difference between the income statement, the balance sheet, and the cash flow statement. The income statement is a period of time, the balance sheet is a point in time, and the cash flow statement is also a period of time. The income statement shows profitability, the balance sheet shows your financial position, and the cash flow statement shows how your cash moves in and out. The income statement measures your revenue and expenses and profitability. The balance sheet shows us your assets, liabilities, and shareholders' equity. And the cash flow statement shows us the increases and decreases in cash. The starting point for the income statement is your revenue, balance sheet is your cash balance, and cash flow is your net income. And then the ending point for the income statement is your net income. The balance sheet is your retained earnings. And for the cash flow statement, it's your cash balance. And I guess I'll stop right here just to see if Russ needed to add anything.
Oh yeah, I got some stuff to add.
Okay.
So as we're all probably realizing right now, cash is king definitely in this time period. So you can have $1 million in sales and $500,000 in expenses and think you're okay. But when 800,000 of that sales is still in accounts receivable, so you really only have $200,000 in cash coming in, then you're gonna have an issue. So definitely keeping a good idea of how much cash you have coming in and out is going to be really, really, really important in these next couple of months. And then also having a balance sheet as just like an overall picture of where you are financially too is going to be huge for you too, just because you can't always maintain a short-term outlook, even though we want to in these next probably couple months. So I would definitely say watch out for that. So I would stress deal with cash when you're dealing with your statements, and then always have an updated balance sheet probably every month. And then if you are looking for loans, I would say most banks, they're still going to require 1 or 2 years of statements depending on how old your business is. So definitely get that up and ready in these next couple of days. We can talk more about the services we can provide for you later on, but that's probably my last couple of statements on these statements and what I think is most important about these 3 statements. So we can continue on probably.
Okay, so a lot of the times we'll have these Excel spreadsheets for some of the more basic functions, stuff that you could just do easily. There's also a lot of different accounting software out there. Depending on the size of your company and what you actually need it for, a lot of the times we just automatically recommend QuickBooks. You could use QuickBooks on the cloud. So that makes it really, really easy. Even though this doesn't show it, I believe you could use QuickBooks on your phone as well. So if you see my little picture, the different programs, they have function, desktop or basically mobile. And then each, depending on what you really need it for, shows it. So these programs, I mean, the only one I'm really familiar with, QuickBooks and FreshBooks. The reason why a lot of people use FreshBooks is because it is pretty simple and straightforward, and you could do it on your phone. I know there's a lot of people that may use different programs, and that's okay. Some people do it with pencil and paper, that's okay. But we always suggest that a person, no matter what system or accounting software they use, they try to keep up to date with what they're doing financially. So basically, we'll talk about these next steps. Once again, I'll make sure that I say, no matter what you're using these financial statements for, normally I try to say, have your goal in mind. Maybe it's to find financing for your small business. Maybe it's just to see where you can improve. I mean, if you have a small business, that is your goal, to keep running your small business. But no matter what, I always try to say, have a goal in mind. Maybe you're trying to grow your business, maybe for whatever reason. And I hate to beat a dead horse, but that's why I feel like a business plan is always important, so you'll know what your goals are for your business. The next step I always will say is to make sure you have all your documents together, or at least your passwords readily accessible. So for your bank statements, a lot of banks still send out those paper statements, or at least know where you could get a full statement for your bank statements online. Make sure you know how much you pay every month for all of your fixed expenses. Right now, this is more important than ever, because to get a lot of these, the SBA disaster assistance loan or the IEDA grant, you have to know your expenses. You have to know your revenue. And you'll have to have all these documents together. So now more than ever, that's really, really important. Figure out what system you want to use. Excel is always free, or maybe find out what accounting software you would want to use. There's different prices for different things. Sometimes, I mean, it's just better to hire a bookkeeper to do your books. I always suggest that a person knows their numbers, but you know, sometimes a barber is just better at cutting hair, and a bookkeeper is better at keeping books. So just know your limits and know what you're doing, or trying to get done. There's always other resources. SCORE is always a resource. The Iowa Center is a resource. We are always available to assist our clients. We try to keep trained people that can assist our clients, so always feel free to contact us. You could call us or email us. I think it's info@theiowacenter.org. And then we're always available to do one-on-ones. I know this was a very quick, high-level overview of financial statements. And of course, I don't know everything about everything, but we are able to do one-on-ones with you if you need help to review your financial statements, or maybe something just isn't adding up. We're really good at finding where those errors are. So we're always available to assist you guys one-on-one. And I'll stop now for any questions, or for Russ or
Yeah.
Zach.
Actually, TJ, can you go back one slide?
I'm sorry, say that again.
Can you go back one slide?
Yes, sir.
Yeah. So just my add-in for this is, at least anecdotally, as looking at loans that we get through the Iowa Center, I would say Excel, people who use Excel and use those online programs, at least anecdotally, they usually have the worst financial documents out of everybody. And then next would be QuickBooks, FreshBooks users. It's pretty good. I mean, you can get QuickBooks or FreshBooks. The easiest plan is, I think, is around $7, and the next plan up is around $14 to $15. So, and that's per month. So it's still a pretty low cost, but using QuickBooks or FreshBooks really helps get your financial documents together, and they get compiled quicker, and you can spend less time on it, and you can be better assured that they're going to be correct. And then obviously the next one is just hiring an accountant, but I also understand that that might not be an option for you or for your business at this time. So at least in my opinion, I would say definitely spend the money on getting a FreshBooks or QuickBooks subscription, because it will really help you when you're looking to apply for a loan, or even at year end when you're doing your taxes. It's definitely worth the couple dollars a month that you would spend on that.
I guess I'll just add really quick. If you are gonna do, well, no matter what accounting software you use, or if you use Excel, if you're not sure about the number that you're going to put in to a particular field, you could call us and ask, or for clarification, or Google an answer, or anything, because field, it will skew your whole document and make it worthless. So always try to be very clear and concise with the information that you're putting in, and make sure it's correct, because you could put in an incorrect number and it will not tell the true story of your business. Questions?
And you can use either the chat or Q&A function to type your questions in. Or you can here raise your hand too, and we'll unmute you if you just want to voice it out.
Okay, if we don't have any questions, or at least at the moment, I have a few things to say at the end here. And I apologize if you've been on a call this week with us, or if you plan to in the future. I'm going to sound like a broken record, but I think reminding everyone of these resources and the importance of communication and community at a time like this is extremely important. So bear with me. Again, we have a COVID resource page on our website. So you can click there from our homepage. We have an Instagram handle at the Iowa Center that is keeping everyone up to date on future conference calls, webinars, resources, one-on-one coaching opportunities, etc. We also have a Facebook page for community contact, Q&A, and discussions. It's Iowa Small Business Resources and Support. This is the point where we would usually promote upcoming Dream Builder classes, etc. I think everyone already understands that at a time like this, we can't really, as an education center, continue with our regularly scheduled programming. So we do have some things in the works, but they're not completely set in terms of curriculum. I think it's going to be a little bit more of, because we as a resource and an education center, and local business owners or prospective business owners, everyone needs to pivot a little with the situation that we've been put in. So we, again, welcome all of the feedback that we can get in terms of what the community needs so that we can be that resource for everyone. So please contact us with any questions, comments that you have, and any updates that we have for upcoming webinars and classes will be shared via social media. I think, TJ, we didn't talk about this before, but may I assume that you're willing to share this PowerPoint with whomever would like a copy afterwards?
Oh, of course. I believe all of the Excel spreadsheets that I showed on our slide will be on the iowacenter.org. Probably under, well, I'm not sure, but you could always email me and I'll send you the slides. TJ daniels@theiowacenter.org, or of course you could find us on our web site. You could always email me with questions, and I'll be more than happy to get back to you, or I will send you this PowerPoint presentation.
Excellent. We have a class coming, or a webinar